While watching bullish price actions, let us inform you our review on XHLD. 10 Holdings Incorporated, XHLD, has recently made a noteworthy move that could have significant implications for its stock performance and investor sentiment. On March 17, 2025, the company announced a $1 million stock repurchase program. This is more than just a routine financial maneuver. It's a strategic move with lasting potential. What stands out about this buyback program is that it's an evergreen one, meaning there is no fixed expiration date. 10 Holdings can repurchase shares at its discretion, depending on market conditions, legal considerations, and other factors, leaving them with the flexibility to buy back shares whenever they feel it's the right time, rather than committing to a set schedule or amount. To understand why this matters, let's take a closer look at 10 Holdings and what it does. The company operates in the event planning, production, and broadcasting space, and it's particularly well-positioned in the rapidly growing virtual and hybrid event market. Over the past few years, the landscape of events has shifted dramatically, with virtual and hybrid events becoming increasingly popular. This is where 10 Holdings has carved out a solid niche with its Zyvid Pro platform, which offers a comprehensive range of services for both virtual and hybrid event planning, production, and broadcasting. The Zyvid Pro platform provides professional-grade audiovisual production, broadcast-quality presentations, and highly customizable event designs. The platform is scalable, allowing 10 Holdings to cater to different event sizes and formats, whether it's a small virtual meeting or a large-scale hybrid event. As demand for these services continues to grow, 10 Holdings is in an advantageous position to meet the needs of businesses and organizations that are looking for flexible and cost-effective ways to connect with audiences. The ability to seamlessly blend in-person and virtual experiences is a strong selling point as companies and organizations increasingly look for ways to expand their reach. Now, shifting back to the stock repurchase program, this move is notable for a few reasons. Stock buybacks are often seen as a sign that a company believes its stock is undervalued and that it's willing to invest in itself to help boost shareholder value. When a company buys back its shares, it reduces the total number of shares in circulation, which can increase the value of the remaining shares. This type of program can create confidence among investors, as it signals that the company's leadership believes in its future prospects and financial health. For 10 Holdings, the $1 million buyback is a show of faith in the company's future, as it demonstrates that the board of directors believes the stock is undervalued and worth supporting. What makes this buyback program particularly interesting is its evergreen nature. Unlike traditional buyback programs with fixed timelines or dollar amounts, the evergreen structure allows 10 Holdings to repurchase shares at any point, depending on market conditions. If the stock price drops or market conditions become more favorable, the company can step in and repurchase shares at a lower price. On the flip side, if the market is too volatile or the price isn't right, the company can hold off. This level of flexibility allows 10 Holdings to be opportunistic with its buybacks, making decisions based on real-time market conditions rather than being locked into a rigid schedule. This could be an intelligent move, giving the company the ability to take advantage of favorable conditions when they arise. For investors, this type of move is something to pay attention to. When a company invests in its own stock, it's generally a positive sign. It indicates that the leadership is confident in the company's future and its ability to generate value for shareholders. In 10 Holdings' case, the buyback program is likely to reassure investors that the company is focused on enhancing shareholder value and is making strategic decisions to support its stock price. Of course, while stock buybacks can be a positive signal, they don't guarantee long-term stock price growth. The effectiveness of the buyback will ultimately depend on 10 Holdings' ability to execute its business strategy, maintain and grow its market share, and adapt to changes in the event production space. The industry is still evolving, and companies like 10 Holdings must continue to innovate in order to stay ahead of the competition. A buyback may provide short-term support to the stock price, but sustained growth will come from a solid and forward-thinking business strategy. It's also important to consider the broader market context. A stock buyback can sometimes lead to a short-term boost in stock price, as it signals confidence in an effort to enhance shareholder value. However, the success of this program will depend on how the market reacts, as well as on broader economic conditions. Even with a buyback, external factors such as market volatility, economic downturns, or shifts in investor sentiment can still impact the stock's performance. In conclusion, the announcement of 10 Holdings' $1 million stock repurchase program is a positive move for the company and its investors. The flexibility of the Evergreen program provides strategic opportunities for the company to repurchase shares when market conditions are favorable, which could support the stock price in the near term. For current shareholders, this signals that the company's leadership is confident in its future and its ability to generate returns. For potential investors, this buyback is worth watching, as it adds another layer of confidence in 10 Holdings' long-term growth prospects. As the company operates in a fast-growing sector and takes steps to support its stock, it could be a solid player to keep on your radar moving forward. Please subscribe, give the video a like, and watch more from our playlist. Thanks.